Welcome back to the iWealth podcast. I'm with my buddy Mega Matt today. And Matt, you're a business owner, entrepreneur. I consider myself that. Trudy has her business. Like, when it comes to business owners that I primarily work with, I have a question for you. Just put you on the spot. So there's this acronym out there called EBITDA. EBITDA, and it's all based upon your taxes, and it's based upon your financial statements, and it's pulling out some numbers. And then it's figuring out what that EBITDA number is times a multiple, which is how much your business is worth.
Yep.
And so let's say that you made $100,000 this year and it's a 15 times EBITDA, you'd be worth $1.5 million to sell your business. But there's also another method where you just take a look at your overall revenue. So you have $1 million come in this year,
Yep.
and you say it's 1.5 times the overall revenue, which is 1.5 million.
Okay.
So my question is, like, in your space with video and audio
Production.
and things like that, if you were going to sell, a production company, like, would you look at EBITDA? Would you look at revenue? Like, have you ever thought about it in terms of, maybe not you, but other friends that are in a business on selling? Like, how would you think about that? Somebody's ready to sell their business. How would you look at it?
Yeah. I guess that number doesn't really play into the way that I personally think about it. The way that I personally think about it is, how much is my wife going to spend every month? I'm being serious, right? Yeah. How much is my wife going to spend every month, right? And what do we need to be able to pay the taxes on our home?
Right, because you won't spend any money. Just
and then what does it cost to get a new bike, once a year in retirement?
Yeah.
And that's the way that I always think about it.
You know what? On a serious note,
Yep.
You're talking about the wealth gap.
Yep.
So here's what's interesting. So I'll sit down with the business owner and we'll figure out what we think their business is worth.
Yep.
Typically, it's on the EBITDA formula. We got to add back in like their depreciation, their car that they're driving, their salary. We got to add back in, and we come up with this EBITDA. And then it's doing some research on the multiple on that EBITDA. For instance, in financial services, it's 6, 7, 8 times, maybe 10 times your EBITDA number.
Yep.
And somebody that owns the business has control over that. So if you want to sell your business 5 years from now, you start to work on that EBITDA so that you can then get a higher number and then times that times the multiple. But here's the issue. This is what you alluded to. It's called the wealth gap. And by the way, you spend money too, not just her. The wealth gap is this. So let's say you sit down and we say, hey, Matt, you need to have, $100,000 a year come in to live your lifestyle.
Yep.
To be able to get your van and bike and all those other kind of things. That $100,000 a year, then you take that by 4%, and you back in to the dollar amount that you need to have. And let's say you need $4 million. And then we do the EBITDA calculation, and your business is only worth $3 million. You have a wealth gap of $1 million.
Okay.
Right? You're worth $3 million, and you need $4 million. So then we go back and we look at what do you have saved. Now you got $500,000 saved. Now you're at $3.5 million, but now you have a wealth gap of $500,000. Means we can't sell your business for $3 million. We either have to get 3.5, or you need to keep working, keep saving until we fill that wealth gap up. But the biggest problem is this: business owners don't know, and they're not doing these calculations, and they're not thinking about it. And we're all going to sell our business someday. You're going to sell your business someday, Matt. You're either going to die, right? You're either going to die and it's gone, or your family's going to sell it, or you're going to sell it internally to a family member or something, or externally to somebody else. And I think the sooner you get your head around what those numbers are and what they look like take yourself out of the business and do some of these calculations, talk to somebody like ourselves or whoever it is, somebody you trust, and go through it, the better off you are. But the wealth gap is true. You kind of alluded to it.
Yeah.
It's true. Yeah.
So it's not just about, because you always hear about what they call, quote unquote, like the burn rate, right? Like, how fast are you burning through that money?
Yeah.
When it comes to retirement. But then if you're a business owner, that other aspect of what is the business returning on your exit, that is as important as even the burn rate.
And most people, call it the golden goose, whatever you want. Most people have most of their assets tied up in their business.
Yep.
It's not out in a mutual fund somewheres or individual stocks. It's that business that's the most important.
Yeah.
And I have clients that want to take chips off the table. meaning they're getting to be 50, 60 years old, and they're like, I don't want to have all my assets in this one golden goose. Like, I'm going to sell some of it. But I have other ones that say never. I'm never going to do it. Well, you're going to do it someday. So let's just get prepared and never sell it. That's fine. But let's at least do this calculation and get through the thing. So
I like it.
Yeah.
I like that you like, or you at least get a kick out of or enjoy helping entrepreneurs with that part. Because it's scary as an entrepreneur to even think about that.
Yeah.
Because you have to come to reality with the fact that it's not always going to be your baby.
That's right.
That's hard.
And the cash flow that they're kicking off and you're living off of, like, a lot of people don't even know what they're spending on a monthly basis. So it's just getting their head around, what do you really need, using the 4% rule, finding out how much your business is worth. So that whole conversation I love having with the business owners, because it just gets them out of their day-to-day and gets them to kind of focus on what that next phase might look like if they ever get there, you know?
There you go.
Yeah.
All right. Well, we will see you back here next time.
Thanks, Matt.